is what happens if I have a cancellation of debt, and does that create taxable income for me? Well, the answer is, and it's our favorite response as CPAs, is it depends. In most situations, anytime there's a cancellation of debt, so the taxpayer received economic benefit by the loan, and then they are in a position where they are unable to repay either all or a portion of that loan, then that difference generally is going to be considered taxable income if it gets relieved by some measure, whether it's if the creditor just either deciding that they're going to no longer collect, they're not going to exhaust their rights to collect on the debt, or they've settled it with other assets, but your assets aren't able or sufficient to cover. But whatever it may be, at some point in time, if the debt is relieved, or you're relieved of covering that debt, at that point in time, it is going to be taxable income. Now, there are a couple exceptions that apply to many folks. The best way to think about it is what is the type of debt, and that will determine if there's an exemption that qualifies. For most folks who have credit card debt, just can't pay it right now, but they still have income or the ability to earn income, and they're just looking at trying to reduce or negotiate a better payment, and maybe try to get an acceptable lesser amount accepted. They're going to get a 1099-C, and that 1099-C is going to be the amount that was forgiven. But for most purposes, they're not going to be able to exclude that from taxation. So it's going to be just like income to them, and they're going to pay tax on it. Now, if they're insolvent, there's a potential they could. There's a specific exemption under the tax code that if you're in bankruptcy, or if you're insolvent in the terms of my liabilities exceed my assets, and there's certain assets and liabilities that you have to look at that qualify for that, but you can be technically insolvent but not actually filing for bankruptcy. In those cases, then you may be able to exclude it. But in most cases, consumer debt, that's not going to be able to be excluded from income if it gets relieved.